For generations, gold has been India's favorite safe haven asset. But this year, that safety came with a record price tag. Gold prices in India stand at just over 1.4 lakh rupees per 10 grams, a level that seemed impossible just a few years ago. But this comes even as prices dropped 22% since March, marking the sharpest correction in years. So has gold become too expensive, or is this just a temporary pause before another rally? Now, gold has delivered a stunning rally over the last year. Historically, gold prices in India remained below 1 lakh rupees per 10 grams until April 2025. But on July 29th, prices were hovering just above 1.4 lakh rupees. Globally, gold touched a record high of nearly $5,600 per ounce in January 2026. However, after the sharp rally, gold prices pulled back to just above $4,000 since February of this year. Spot gold has marked one of the sharpest corrections in years. The fall came as energy inflation increased expectations that central banks could keep interest rates higher for longer. Despite lowering forecasts, analysts are now predicting a collapse. That's because the long-term argument for gold remains intact. The biggest support comes from central banks. Countries are continuing to buy gold as they look to diversify reserves, reduce dependence on the dollar, and protect against currency risks. Analysts say that geopolitical tensions, rising government debt, and concerns over currency value continue to make gold attractive. However, high prices are hurting physical demand. In India, buyers are becoming cautious, especially after gold import duties were increased to 15% from 6% earlier. This brings us to the question every gold buyer is asking: should you wait for prices to fall? Well, the answer from analysts is nobody can accurately predict the bottom. Most experts believe a crash is unlikely in the near term. Instead, analysts expect corrections to be gradual. A 5 to 15% fall from current levels is considered a normal market correction, not a collapse. For Indian households, the strategy depends on the purpose. For jewelry buyers, waiting for a small correction may help, but for long-term investors, analysts say the timing of the exact bottoming is extremely difficult. Because while gold can fall in the short term, the forces supporting it have not yet disappeared.